You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Thursday, April 11th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com, and it's the top 5 things to know in the market on Thursday. The first thing to know is Wall Street was set to open flat today. Stocks were struggling to build on Wednesday's gains, which followed the first explicit mention from the Federal Reserve that its next move on interest rates may be down rather than up. No fewer than 6 senior Fed officials are due to speak Thursday. Richard Clarida, John Williams, and James Bullard, all speaking within 10 minutes of each other, starting at 9:30 a.m. Eastern Time. Banking Supervision Head Randall Quarles follows at 11:50 a.m., followed by Neil Kashkari at 2 p.m. Eastern and Michelle Bowman at 4 p.m. Eastern. In between all of that, there will also be initial jobless claims and March producer price inflation figures at 8:30 a.m. The second thing to know today is Uber is set to publish its IPO filing. Uber may publish its IPO filing today with a view to listing on public exchanges in early May, according to the Wall Street Journal. The ride-hailing company may seek a valuation between $90 billion and $100 billion, the paper said, referring to documents related to a recent issue of convertible notes. The valuation is over 20% less than mooted last year by bankers vying for the IPO mandate, reflecting concerns about possible overpricing. The threat of immediate competition for a place in investors' portfolios appears to be taking its toll on Lyft, which fell nearly 11% on Wednesday. The third thing to know today is kicking the Brexit can, is that this segment's title. European Union leaders did what they do best and kicked the Brexit can 6 months down the road. At a special summit in Brussels, leaders agreed that the UK will now leave on Halloween, seriously, unless the UK Parliament can approve the already negotiated withdrawal agreement. The UK will be out of the EU without a deal on June 1st if it fails to take part in EU parliamentary elections starting May 23rd. Reaction to the prospect of another 6 months of uncertainty has been muted but negative, with both sterling and the UK FTSE 100 falling slightly. The fourth thing to know today is oil struggles to hold gains. Crude oil prices are coming off Wednesday's highs as concerns about global growth outweighed a warning from the International Energy Agency that the global market is tightening. The IEA cited OPEC-led supply cuts and increasing effectiveness of U.S. sanctions against Iran and Venezuela. The benchmark WTI blend futures contract was unable to hold gains it made immediately after the report and was at $64.08 a barrel at 5:30 a.m. Eastern Time, down some 65 cents from the 5-month high that it hit on Wednesday. And the fifth thing to note today is Boeing seeks a foreign stamp of approval for the 737 MAX. Boeing has accepted it will have to rely on the goodwill of foreign aviation regulators to get its 737 MAX back in the skies. The Wall Street Journal reported that some of its customers had insisted that regulators other than the Federal Aviation Authority also sign off on safety fixes to the airplane's software that are expected sometime in the summer. Boeing didn't book a single order for the 737 MAX, previously its best-selling model, in March. The company's shares have fallen some 14% since a fatal crash in Africa a month ago. Our second story today is from CNBC.com. Treasury yields edge lower as investors digest Fed minutes. U.S. government debt yields were slightly lower on Thursday morning, continuing a downward move after the European Central Bank held interest rates steady and the Federal Reserve released the minutes of its latest meeting. At around 4:30 a.m. Eastern Time, the yield on the benchmark 10-year Treasury note, which moves inversely to prices, was lower at around 2.4773%, while the yield on the 30-year Treasury bond was also lower at 2.8985%. The Fed released the minutes of its March monetary policy meeting on Wednesday, revealing that Fed officials are leaving room for possible interest rate increases, this says, by the end of the year, but adding that they currently do not expect to make any changes. Just reading what it says here. Speaking at a press conference in Frankfurt, Germany on Wednesday, ECB President Mario Draghi warned that data gathered by policymakers in recent weeks had confirmed slower growth momentum in the Eurozone. The German 10-year government bond yield, an important benchmark for European fixed income assets, and one that's viewed as a safe haven for investors, dipped into negative territory on the back of Draghi's comments. On the data front Thursday, weekly jobless numbers and a producer price index are expected at 8:30 a.m. Eastern. And our final story today is from finance.yahoo.com. It's Yahoo Finance. Tesla falls on report of Panasonic factory expansion freeze. Tesla slumped after Nikkei reported the electric car maker and Panasonic Corp are suspending plans to expand the capacity of their $4.5 billion U.S. plant in the face of uncertain demand for electric vehicles. The pair had intended to raise capacity at the Gigafactory near Reno, Nevada, but about 50%, or by about 50% by 2020, but financial problems forced a rethink, the newspaper said, without citing its sources. Panasonic also intends to suspend planned investment in Tesla's battery and electric vehicle plant in Shanghai, and instead provide technical support and a smaller number of batteries from the existing Gigafactory, the newspaper reported. We will, of course, continue to make new investments in Gigafactory 1 as needed, a Tesla spokesman said in an emailed statement. However, we think there's far more output to be gained from improving existing production equipment than was previously estimated. And that, ladies and gentlemen, is news you can use for today, Thursday, April 11th, 2019, your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/live. options.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.